You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. How are you doing?
Well, I'm doing pretty well. I'm wondering, the markets seem to be pretty positive about Greece, so-called making an agreement, but is it going to last and does it mean anything?
Oh, jeez. I tell you, it's been one of the craziest soap operas we've ever seen in the financial markets, this Greece situation. And one thing that's kind of startling about it is, I've been watching it real closely in the news, and I know some people that live over there, and I talk with them, and I actually invested in the Grec ETF several years ago, and then ended up selling it early last year, and I am considering one day investing in it again, but it's such a mess now. It's really become a sad story, and they did a referendum the other weekend where the voters said they didn't want a bailout deal, at least they didn't want the deal that was presented to them by the creditors, the ECB, the European Union, and the IMF, the so-called Troika. And then within a week, last weekend, another deal was created and accepted by Tsipras, the Prime Minister of Greece, that was even worse than the agreement that the voters had rejected, even worse in terms of the number of taxes that are going to go up, the cut in the government budget, but even more devastating is that the creditors demanded that the Greek government put up about $60 billion in collateral of state assets that they own. These are buildings, companies, and so forth, which really represents a great loss of national sovereignty for a government. And me and you and everyone listening, we've seen crises happen in countries all over the world over the decades. You can think about the Asian crisis in around 1997. Mexico defaulted in the early 90s. Russia had a crisis in 1998. Argentina in 99, 2000, and then just recently last year. And all these crises had a resolution and an end to them, usually involving a default on the debt, a printing of a wild amount of money. That's what Mexico did in the early 90s. It's basically what Argentina is doing twice. Russia defaulted. But Greece has not done that and was on the verge of doing it, but they didn't. And what I think that means is that the crisis there is not over. The economy there is not going to recover with this deal. It's just going to be more of the same. And the IMF just a few days ago itself issued a report saying that this deal, without any real debt relief, will never bring an economic recovery for Greece or solution. So what is going on, And basically, to make a long story short, and it's a message you won't really hear from the financial media, but everyone knows it's not going to work. And then you must ask, well, why are they doing it then? Well, the Prime Minister of Greece has bet his political life on trying to negotiate a deal, and he's trying to become something like an indispensable voice in Greece, like the only person that can now do these sort of things. And almost like he wants to become a Winston Churchill type figure. But with the creditors, I think what they're really doing with this deal is they know Greece will never recover. They don't even care. And they're just going to try to milk that country even more for another 2 or 3 years, for as long as they can. They're going to privatize stuff, for pennies on the dollar. That's what the collateral's about. And we basically kind of have a similar type operation going on in Ukraine. That economy has been devastated, and IMF is there giving them these loans, and in return, we're privatizing state assets of Ukraine to oligarchs connected to these banking cartels. And that's brutal force, and that's what this is really about. It's, that these voters voted something, and, the people of Greece want things to get better, but these banking forces, they don't care about that, and they're just out there to make as much money as they possibly can. Now, for us, living in Canada and in the United States, what does this mean for us? Well, I think a couple things. One, if you want to invest in Greece, which I would like to do, I think you have to wait now even longer, another year, another 2 or 3. And as far as the financial markets, our markets go, I don't really think there's going to be that much of an impact anyway. This deal will kind of make the Greece situation go out of the news now for a long time, and by the time it comes back in the news, there'll probably be something else going on. So I don't really think it makes any difference for our financial markets. I actually think our financial markets are probably due to drop anyway, regardless of what happens in Greece at this point. The reason why I say that is, all markets move in cycles. We started a bull market in 2009, but I believe we're really at the end of it, and this is really a topping phase in the market. Even if the NASDAQ or the S&P 500 were to manage to make a new high during this earnings season, I don't really think it's going to go anywhere if it does, and it'll just be going back down in August. And the reason why I'm pretty convinced of that is that starting in May, when the S&P 500 last made a top, a bunch of negative divergences started inside the stock market. What this means is that fewer and fewer stocks were participating in the market rally, and actually more stocks were starting to decline and go into bear markets, and eventually that will pull the whole stock market down. So just the other day, 60% of the stocks on the New York Stock Exchange were trading below their 200-day moving averages, even though the other, NASDAQ, the Dow, and the S&P were above them. And that's the type of thing you see at the end of a bull market and the start of a bear market. So I actually think that we really only have a few weeks left of positive action in the stock market, and then everything will start to really go into bear market. And if I'm wrong about the bear market, well, then I think we're at least due to see a 10, 15, 20% correction, which is what happened in 2011 and in 2010. In fact, the setup right now is actually very similar to 2011 because back then you also had a little bit of a dip in June and then a bounce, and the internals all didn't participate. So that seems to be what is happening now.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson from WallStreetWindow.com. Mike, are Canada and the U.S. really in a recession right now? Both countries' officials are denying that they are, but are we really?
Well, I don't think we have negative GDP growth, which is what you really need to see 2 quarters of to say that you have a recession. However, we're not in a recovery, so it feels like a recession for much of the country and in many sectors of the economy. In the retail sales figures show that, and so do the so-called unemployment figures, because the latest unemployment rate in the United States in May showed that there was a record number of people that left the job force by the way they calculate it, so they don't even calculate those people as being unemployed. And the report disappointed the expectations of the Wall Street people who were expecting some boom to happen. However, I'd like to point out that each of the past 4 years, we've seen something very similar occur, meaning that in the first couple months of the year, the economy would be slower than expectations. So a lot of this job data would be bad, and sales data was just as like I described. However, the Wall Street economists would predict a second half boom, and that's what they're basically predicting now. And if you could remember back to 2011, that there was a very similar thing happened. There's a bad winter. The GDP number was actually negative in the first quarter. However, they said that there'd be a boom in the second half, and the Fed would probably raise interest rates as a result of that boom. And then in July, there was a bit of a correction in the stock market, and that caused the Fed to give up on the boom predictions and to start to talk about creating a new money printing operation. Which is exactly what they ended up doing. That's when they created their last QE. In just the weeks before that QE announcement, there's claims of booms coming, and an economic boom, and it didn't. And I think that's exactly the same sort of environment we live in right now. I think it's all kind of repeating in many ways, in the sense that I don't think there's going to be these big interest rate hikes. And if the stock market pulls back after this month, then talk of raising interest rates may vanish altogether, and we may even hear talk about another money printing operation, which, to someone who's watching CNBC, no one is saying anything like I just said. It just sounds like someone talking in a different world. But if you think back to 2011 or 2010 even, that's the same thing that was going on then, talk of boom, and then you see like people like Peter Schiff on TV saying that wasn't coming, and they laugh at him. I just don't see it. I don't see this evidence of a boom coming, and with some of the troubling internals of the stock market, it's just not looking like it's coming there.
Do you think we've learned any lessons from what we've been told in the past? It seems that we keep being told things are getting better, and yet the statistics at the end of the year don't prove that out.
Well, the problem is some people have. I think you have. We've noticed it. We're talking about it. But to tell you the truth, I don't think people really, the people that are really bullish in the stock market, have learned anything. They don't even care. All they care about is that stocks, in their mind, are just going to go up forever, and they fit all news to fit into that mind frame. And they're just totally dedicated to that belief system. So, that's why so many people now will tell you that, valuations don't matter either. I get feedback from people, when I write things or even do interviews like with you, and people that will want to argue, and they'll basically say, okay, the stock market's gone up, but, it won't fall because interest rates are zero, and therefore stocks can just go up forever. And that's, they're not worried about economic data or fundamentals or earnings, and they don't feel like they have to research anything. You just buy and think that the market now goes up forever.
Well, of course, we know nothing does go up forever.
Markets surprise everybody. I mean, I'm not trying to say I'm not surprised. If you take gold, for example, I thought gold was going to start to go up a couple weeks ago, and it hasn't started to do that yet. It's still languishing around about the 1140 level. So, and gold topped out in 2011, and here we are 4 years later. And 4 years is a very long time for a bearish cycle in any market. So, and the U.S. stock market, for that matter, I mean, it's gone up. This would be the 6th year of the bull market started in 2009. That's a long time for any market. So, I've got to admit that, I started really telling people to be careful or start selling stocks to a certain point last year. But my argument last year is that this isn't going to go on forever, and you just have to, diversify and be more prudent of an investor. But now it's more instead of a message of just being cautious. I really think we're approaching the end of the bull market, and I really think it's that time to just worry about it, but to take some sort of action about it too.
And what kind of action is that?
Well, the simplest thing people can do, anybody, the average person, that doesn't want to, that isn't really actively trading or looking at their accounts all the time or whatever, just anybody. I think the simplest thing to do is make a 10% cash reserve position, so if the stock market does fall, you can buy in at lower levels in a year or two. And then if you say, well, I'm not so sure, and maybe it'll go up, well, you still got your other the stuff you didn't sell, and then sell another 10% and move that into gold, because in the long run, the real way to invest is to buy stuff when it's cheap and it's in a position to go into a new bull market. And the U.S. stock market isn't in either one of those positions. It's not cheaply valued at all. The cyclically adjusted PE has only been higher than it is at the moment 2 times in its entire history for the S&P 500. And then it's gone up for 6 years. So it's not about to start a new bull market. Look for things that are in gold, silver, and other commodities too. I think we might have talked about the agriculture commodities the other week, and they're all starting to turn up. And I think, they're going to go up just like gold and silver will when they finally turn up. But these are turning up. Corn, wheat, sugar, coffee, all of them were in a bear market, and now they're breaking above the 200-day moving averages. Cotton. So those are things that I think will go up. So, it's not just simply about getting out of the stock market or to save yourself from losing money, but in the long run, you got to always try to figure out where is the best place to put money to work, and where is the next bull market going to start? Because usually there is a bull market starting somewhere every single year. And right now, it's these agriculture commodities where it's starting at, and gold and silver should follow them up. And, maybe next year it'll be Russia or something that'll be starting a new bull market, no matter what's happening in the U.S. stock market. And maybe in 2 or 3 or 4 years it'll be Greece, because one day the crisis will end there, but good grief. It's not ending with this deal.
I was going to say, it seems to me Greece hasn't really prospered since the Romans took them over 2,200 years ago.
No, I guess they haven't. I guess the Romans, they stole their money and then they stole their culture too, and just copied it. All the Roman gods are just Greek gods with different names.
Mike, thanks a lot for chatting with us.
Thank you. It's always good to talk with you.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.